Indus slips despite the 2,640 crore buyback announcement and a sharp 460 basis points margin improvement. Birlasoft also declines after the constant currency revenue drops 2.7% and deal wins witness a sharp fall, while weak subscriber growth and lower traffic hurts India Mart. Hello and welcome to Markets Forward, your go-to show where we tell you what transpired during today's trading session. We also gear you up for tomorrow's trade. I'm Nigel D'Souza, and joining me, Bandopadhyay. Hey, Sudip.
Hi, Nigel. Earnings, and more earnings, and bulls having to wait one more day for Mount 25,000.
Well, that's right. And we've got 2 more days in the week. It's been quite a long one. And as you said, earnings just flowing in. But for today's trading session, yes, the Nifty ended in the green. The problem pocket today was the Nifty Bank. That did perform in today's trading session. In fact, it was a relative underperformer. And the Nifty Bank played out the monthly expiry. So that's why it was fairly volatile. Towards the end of trade, well, it gave up its underperformance, managed to move into the green, but still, it didn't do as well as what the Nifty did. But you'll say the broader markets did well because there were more stocks that were winning than losing. Even the mid-cap index actually was higher in comparison to what the Nifty did. But a closer look will tell you that by the end of it, at the start of trade, you had close to around 4 stocks that were advancing for 1 stock that was declining. Towards the end of it, both those 2 lines got a little bit closer to each other. In fact, by the end of it, they almost kissed each other. But Sudip, what else?
Well, actually, the market underperformed. I mean, India underperformed a lot of the global markets today. Asia was better off. By the time we closed out, Europe was actually trading very positive with all eyes on the US Federal Reserve announcement, which comes out later tonight. So by that stretch, we've been kind of underperforming. But then, the markets had so much of momentum earlier, right? I was talking about earnings and just an illustration of how numbers are driving stock prices. Maruti came out with numbers in the last 5 minutes of today's trading action, and the stock zoomed up like a rocket. That's a big stock for it to move up so much. That's because of the numbers, and we'll tell you why those numbers are looking so solid in just a bit. But just an example, we had a lot of PSU stocks that have reported in the last 24 hours as well. And of course, there's a lot of scrutiny on PSUs, right? Because the stock prices have moved up so much. So GAIL hit the mark. But the other 2, RITES, very sluggish performance, top down, missing estimates. BHEL, losses still continuing at the net profit level and at the EBITDA level. So that was not a great show. So some of those PSUs were out of favor. But overall, the mid-cap market did well. As Nigel said, the advanced decline ratio was trying to hold up. At the index level, the mid-cap index did outperform the Nifty with a gain of about 0.6%. So we have lots lined up for you. We have a lot to go over. We will, of course, start up with all the key movers and shakers. We'll have Vivek joining in with what was up, what was down. In terms of the buzzers today, a lot of stocks moving on earnings. Torrent Power, BSE not on earnings, on, of course, the latest SEBI rules or announcements on F&O. Zee also in focus. We'll have Vamakshi join in along with Vivek with more reasons why these stocks were in focus today. Then, of course, a lot of market events to watch out for tomorrow. The Fed meet, more earnings. So we're getting you prepared for all of that. But first up, let's understand really what worked and what didn't in today's market action. Vivek, over to you.
Well, thank you so much for that. Another day, especially towards the later half, where the volatility actually did get heightened. The first stock on our list today in the list of top movers is HDFC Life. The life insurance pack, even SBI Life today did quite well. HDFC Life, the top Nifty gainer, continues to move higher. The second stock on the radar, one that we'll be speaking about in depth a little later, is Torrent Power. Good set of results. The company operated under Section 11, very strong merchant sales. On the back of that, stock ended higher on very, very good volumes as well. Torrent Power is the one that we're talking about. The third stock on our radar is, in fact, quite a lot of pharma stocks. Granules is one of them. Granules, came out of its results yesterday. Yesterday moved much higher in the session, and today did see some follow-on buying. You also saw some of the other pharma companies. Have a look at names like Suven Pharma, Ajanta Pharma, Granules, of course, Jubilant Pharma, and Syngene. The entire mid-cap pharma pack today did quite well in the session, and Jubilant Pharma were up almost 5%. The next stock in the list of gainers is BSE. Now, despite a lot of worries overnight in terms of tightened norms for F&O trading, BSE today ended almost 6% higher, quite surprising over there. On the other hand, on the list of laggards, Birlasoft, missed, top-down miss, a very weak performance, especially in terms of CC growth. That is something that saw the stock sell off almost 5%. Deepak Fertilizers, good set of numbers, but despite that, you actually saw quite a bit of profit booking emerge. In fact, the stock cooled off almost 8% from the day's high. India Mart, another stock that came out with its results yesterday, expected subscriber additions were quite weak. The back of that 6.5% lower. And Aegis Logistics, again, muted set of numbers from the company in Q1, and that was another stock, Aegis Logistics, that cooled off quite significantly today.
Thanks a lot for that, Vivek. Well, let's get in our experts. We have Sudip Bandopadhyay of Inditrade Capital, as well as Shrikant Chouhan of Kotak Securities, who joins us. Hi, gentlemen, and appreciate you joining in on the show. Well, Shrikant, you go first. Tell us, how are you reading the index moves? The Nifty Bank in particular, today it managed to end in the green. It had the element of around, that monthly expiry that plays out. But how is that looking on the charts? Pat in the middle of the 20 and 50 DMA.
Yeah, good evening, everyone. I think, Nigel, both these indices are consolidating, and they are consolidating in a, let's say, we can say Bank Nifty is consolidating in a very broader range. I mean to say 51,000 and 52,000 is the range, which is huge. And whenever there is a huge range consolidation, most of the time we see trending and volatile activity in the near term. Based on the numbers of all these banks, I am of the view that downside is protected. So I'm going to say 51,000 is certainly going to act as major support for the market. And from there always, we are going to see some buying interest for the index. But at the same time, on the dismissal of 52,000, I am expecting Bank Nifty to move towards 53,500. So almost all these banks are very close to their important supports, and most of the stocks are attractive. For Nifty also, 25,200, 250 is the next target to watch out for. And today, the way it closed at the highest point of the day, I think it is heading for the levels of this 25,000 plus in the near term.
Okay, so 25,000 is coming soon. Shrikant is still quite confident of that, of course. Gentlemen, stay on. We have more questions, a lot of earnings to go over as well. So let's start with the auto big boys, because we heard from Maruti in the dying moments of trade, and of course M&M earlier. Sonia is here with the fine print. Sonia, the way that Maruti's stock was shooting higher was quite something. How do the numbers look?
Well, the numbers are actually looking very good, much higher than what the street was estimating. And it's an all-round beat on Maruti's performance this time around. So just taking you through the earnings, right? The profits for Maruti have gone up almost 12%, coming in at 3,650 crores. The revenues are up almost about 3% as well. The EBITDA has gone up 13% at 4,500 crores, while the margins for Maruti have gone up 130 basis points. If you look at it at 12.7%, this is much higher than what CNBC-TV18's poll was. Even if you look at the profits, right, 3,650 crores is what the company has reported. This compares to a CNBC-TV18 poll of 3,272 odd crores. Now, for Maruti, the net profits have gone up about 46%. And if you look at it, it's the margin expansion is largely because of better operating leverage, as well as a better product mix that the company has delivered.
Okay, that's Maruti. What about the other biggie, Sonia? Mahindra and Mahindra, did it hit the mark?
Yes, Mahindra and Mahindra's numbers were also quite good. In fact, it was an operational beat that the company saw, both in the tractor as well as in the auto segment. The margins have gone up. The auto sector margins have gone up 130 basis points, tractor sector margins up 100 basis points. In fact, the company has also improved its market share across both the auto as well as the tractor segment, and that has led to an overall improvement in the numbers for Mahindra and Mahindra.
Okay, all right, Sonia, thank you very much for that. Let's go across to our guests and get a word in. Sudip, what do you think? The numbers look good, as Sonia is telling us. Now, what about the prices? Do they still offer more on the table? Would you be a buyer, either M&M or Maruti right now?
As far as M&M is concerned, Sudip, I think I'll be a little careful. They have shown, given a good set of performance, but the tractor volumes haven't really shown much of excitement yet. It's went up by about 6%, and I think there is a lot of scope, but unless and until that happens, I don't think I will jump to or recommend a buy in M&M at current levels. The margin of error at this valuation is very limited. It has moved up quite a bit, and all the positives are already factored in. So M&M definitely not being recommended for a buy. As far as Maruti is concerned, I think we need a little more time, honestly, to digest the numbers. I think it's a beat by a yard, and we'll have to understand what really changed the dynamics as far as their internals are concerned. We'll have to study the numbers and then come back. But in any case, our view was Maruti is a good long-term buy. So if somebody is looking at the 2 to 3 year kind of a time horizon, even at current level, Maruti can be bought.
Okay, all right. Got that view. Thanks, Sudip, for that. Both those two auto majors, that's the view coming in from Sudip. But let's focus on the stock of the day, Torrent Power. Well, it was bursting away, electrifying performance in the first quarter. Vivek joins us to break down those numbers for us. Vivek.
Well, a very good set of numbers. In fact, what actually happened as far as Torrent Power is concerned is that, remember, the company has a couple of gas power plants which earlier were stranded in terms of not having long-term PPA signed up. However, due to the strong demand as far as power was concerned, the government mandated these companies to go ahead and run the power plants under Section 11, which is the emergency section where there is a cost plus recovery allowed. On the back of that, companies are allowed to go ahead and sell these in the merchant market, and this has gone ahead and aided the earnings, leading to a very strong growth as far as top line is concerned this particular quarter. So strong merchant sales aided by Section 11 and very strong power demand has led to almost 23% uptick as far as revenues are concerned. EBITDA higher by 57%, margins went up over 400 basis points, and profitability higher by 87%. Just have a look at the thermal PLF figure coming in at 60.4% versus 39.6%. So significant expansion as far as PLF is concerned. Generation revenues up 65%, coming in at 3,677. So overall, very strong set of numbers coming in. Now, when it comes to the con call, what is it that the company gave in terms of capex? License distribution capex coming in at 1,750 crore. Franchise distribution too very strong, and two transmission assets. The company is looking to do a capex of close to 1,270 crore. Company has also hinted at going ahead and acquiring or doing some inorganic acquisitions. Morgan Stanley says the AT&C losses that we saw in this quarter will reverse from Q2 onwards, and the beat was largely led by higher merchant profits.
Okay, all right. Thanks a lot for that, Vivek. Well, Shrikant, let's get your view in. Today it appeared it had a bit
levels, but based on its consolidation formation, I think it is heading for at least 2050 first and maybe 2250 next few weeks or months. So it will take some time, but it is into continuation formation. It is following to the uptrend, and I think the next level to watch out for will be 2050.
Okay, all right, got that. Well, let's look at some more earnings. Zee came out with what looked like a fairly pleasant surprise. The stock was up almost 4% after the Q1 numbers came in. We have Vamakshi joining in with more details. Vamakshi, so not a bad show from Zee, right?
Well, absolutely not a bad show at all. In fact, the company reported a very strong set of numbers. It was a modest beat as far as the revenues are concerned. Revenue came in 1% higher as compared to street expectations. Largely, it is the subscription revenue as well as the other and services segment, which mainly comprises of the movie division, that is driving the growth as far as revenue is concerned for Zee. Domestic advertising revenue, however, was impacted mainly on account of cricket as well as the elections gone by. The EBITDA came in nearly 22% higher. Net profit also was 22% higher as compared to estimates. EBITDA margin came in at almost 12.7%, which is at a multi-quarter high. This has come in nearly 220 basis points above the street's expectations. The company has also shared its outlook for FY25. They believe that gradual margin improvement is expected to continue, and they in fact expect to hit the 18 to 20% mark by FY26. So overall, it looks like a strong set for Zee. We will be waiting for the management commentary that comes through.
Well, thanks a lot for that, Vamakshi. Well, on that note, though, we'll have to slip into a short break. When we return, we'll get to our popular segment, D-Street Chatter, along with all the top market events you need to track. Stay with us.
Welcome back. You're with us on Markets Forward. Now, lots of stocks in focus today, even beyond earnings, and BSE was one of them. This stock was surging after SEBI's F&O proposal came in to curb speculation. Now, it looks like BSE could be better placed than the other exchange, NSE, given the kind of curbs that SEBI is speaking about. Vamakshi is back with more details. Vamakshi, here it seems like someone's loss could be someone's gain. Maybe that was the thought process in the market today?
Well, absolutely, that's right. And that is because, the first reason being that one of the proposals that SEBI has suggested is to allow weekly options only on one benchmark index of the exchange. And this is expected to significantly impact NSE's option volumes as it has 4 weekly index expiries. While the impact on BSE is expected to be limited given that it has only 2 contracts. So the volume impact for NSE is expected at 30 to 35%, while for BSE it's expected at almost 20% as per IIFL Securities estimates. Earnings impact, however, is expected to be higher for NSE because it has a higher share of revenue coming in from options, and the impact on FY26 earnings as well for NSE is expected to be between 25 to 30%, while for BSE it is expected to be much lower at 15 to 18%. Jefferies also believes that for BSE, the removal of BankEx weekly contract can impact the EPS by 7 to 9% over FY25 to 27, but the gains from the spillover trading activity from discontinued products could actually offset the EPS impact. And in fact, in the event of moderate industry-wide impact of the SEBI measures, this can in fact drive an EPS upgrade for BSE. So that again bodes well for the company. So given all of these factors, the stock was surging in trade today.
Neatly explained, Vamakshi. Thanks a lot for that. Well, let's move on then. Nitin Gadkari, the Minister of Road Transport and Highways, has written to the Finance Minister and asked her to consider the removal of GST on life and medical insurance. He said that levying 18% GST on life insurance means levying tax on uncertainties of life. He added that levying tax on medical insurance is a deterrent for the growth of a socially necessary business. Okay, all right. That's what Mr. Gadkari had to say. But let's also get straight to our top corporate voices that we had on the show today. First up, Dixon Technologies. The management expects margins to improve towards that 4% odd mark. They have guided for mobile volumes to be around 28 to around 30 million units in FY25 and the IT hardware revenue to be in that vicinity of around 3 to around 4,000 crore rupees in FY26. The management believes the worst is behind for the lighting business, and they clarified they have no plan to exit it. Next up on the radar is Zaggle Prepaid. The company has maintained revenue guidance of 45 to 55% for FY25. The management tells CNBC-TV18 that they are tempted to raise the guidance, but will wait until the end of Q2. They also guided for margins to be in the vicinity of around 10 to around 11%. The company is also likely to announce an acquisition news in the next 30 days. They're working on a large deal.
All right, let's move on and look at some more corporate voices. The one that I'm looking at is Castrol India. The company says volumes are expected to grow around 5 to 6%, with margins around 22 to 25% in the current fiscal year. The management adds that they are optimistic on data center opportunities in the market, for which is expected to grow in India and globally. That's not all. The management of Jindal Stainless has guided for volume growth of around 20%, adding that exports are under pressure on softer demand and higher freight costs. Also, the company is open for any inorganic opportunity that may come up. All right, so lots of earnings conversations today, and we got you some of the highlights over there. Before we wrap out, let's take stock of what are the major events lined up tomorrow. Sonal is here with the details. Sonal.
Well, yes, the big event will be how our markets react tomorrow to Fed's meet outcome. So that is something we'll be tracking very closely. Earnings as usual, we have a long list here, but just talking about the major ones. We have ITC, Tata Motors, Sun Pharma from the Nifty pack. There'll be Zomato, Imami and Thermax, the other important numbers that we'll be tracking very closely. In terms of global events, we do have Bank of England decision plus monetary policy report tomorrow. US will also be increasing tariff on Chinese imports, including EVs. There's batteries, computer chips and medical products, which will go into effect. It has created a lot of global conversations and debates. US will also be putting out ISM manufacturing PMI data, and the unemployment rate will be there in Japan as well. So a lot that will happen, and something we'll be tracking very closely.
Okay, all right. Sonal, thanks a lot for that. But on that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.
Well, hello and welcome to Business 360. I am Ashmit Kumar, and here are the headlines that we're tracking this evening. 158 people are dead and 200 people injured after multiple landslides in Kerala's Wayanad district. More than 150 people remain unaccounted for, and the rescue efforts continue. Over 3,000 people have been moved to relief camps. Sensex and Nifty end at a record close for the fourth straight day. Mid-caps continue to outperform. Maruti Suzuki beats estimates in Q1. Revenue rises 10% and profits surge 47%. M&M reports a strong operational performance even as revenue